Hi everybody, I'm Francie from Investment Properties Global and we have Ben here again today. Please Ben, just introduce yourself again. Maybe we have listeners that haven't seen the previous videos.
Thanks Francie. Yeah, so my name's Ben Odgers from AH Jackson & Co Chartered Accountants. I'm one of the partners of the firm, have been a partner for the last 10 years and have been with the firm for the last 18 years. We look after a wide range of clients, particularly ones with properties.
That's awesome. Okay, so if a person owns investment properties, it is with a main reason to profit from it. And if you make a profit, that is income. And as we know, income needs to be taxed. So I need to know now what exactly can be taxed, now what expenses. And they are, a property investor will obviously have ongoing costs such as council fees, water rates, and depreciation, maintenance costs, and what else do we have? Land tax, management fees. What of those costs can be tax deducted?
Good question, Francie, and probably ones that the viewers would want to know as well. So, as you say, it's pretty straightforward with rental properties around the income. You receive a weekly rent, and that needs to be recorded as income in the relevant tax return. There's always going to be expenses with properties. It's a necessary evil. Yes. As you mentioned, some rates, repairs, insurance, property agents' fees, those type of things. So generally the rule of thumb is any expenses that can be classed as operating expenses of owning that property will be deductible against the rent. So that could be such things as council rates, water rates, insurance, repairs that are deemed to be cosmetic or bringing the property back to its original standard, such as painting or repairing a door or a broken stair or something like that, plumbing, those type of things. Then there are certain expenses that can be classed as a capital of nature or improvements. So that might be replacing an asbestos roof, which some older properties have around the place, with a brand new aluminium roof. That would be classed as an improvement and would need to be depreciated over a period of time.
Okay. Now talking about depreciation, how can a property investor claim depreciation?
It's a really good question too, because the rules have recently just changed on that. So for the 2018 financial year, the Tax Office has changed rules around property depreciation. Okay. And essentially what needs to happen these days is unless it is a brand new property, so a property that's never been rented out or lived in, so you're buying it either off the plan or straight off the property developer, you need to have incurred the cost of an improvement or an asset in order to claim it. In previous years, you could buy a relatively new property and arrange for a quantity surveyor to go through that property and work out what particular items could be depreciated, such as range hood stoves, the actual building itself, because that has a cost, and be able to claim that. But unfortunately, the ATO has put the brakes on that, and it will only be on brand new property that they can arrange a quantity surveyor to go through that, unless they do the renovation themselves or spend the money on the capital items themselves, and then they can be depreciated from there.
Okay, so it may be a better idea for a property investor to buy a brand new property if they want to claim the depreciation.
From a depreciation point of view, yes.
Yes. Okay, so I have an existing property, and I think you've covered that, but I'm just I want you to elaborate on that a little bit. If I renovate the property so that it has a better value, can I claim those renovation costs?
So the short answer is yes, you can claim those renovation costs. However, we would need to review each of those costs to determine what could be claimed. So could they be claimed as an outright deduction, or would they need to be depreciated at a certain rate depending on what the tax office sees those rates to be or those improvements to be? But the short answer is yes, if you renovate a property, you can claim it, just might be over a period of time.
But it's best if somebody actually discussed that with you.
Most definitely,
yes.
Most definitely.
Because it's
prior to commencing something like that.
Yes. Well, if you do need to talk to Ben, just leave a comment below, or if you have any questions, doesn't matter. We'll answer your questions. I'll shoot it through to Ben and we'll get you in touch with him. Thank you guys, and thank you, Ben.
Not a problem. Thank you, Francie.